Now we are going to discuss the best practices which are supposed to be followed by the credit management, right? So one is that normally the we want the credit department to classify their accounts into ABC. So basically, it will be accounts which are around 80% of the total dues and around 20% or 25% of the total account. So there are always a few big travel agents or customers who take up most of the credit. So they are quite big and they are usually few in numbers, right? So not ABC or not only on the based on the amount of credit but also on the periodicity of the business. So it does not mean that one person has given you a business only once in a month but the other time they are not giving. So not only for that particular month, we need to look at the maybe a year to date number or a month by month business who is giving us the business on the periodic. And we always look at the future potential, not on the past performance only. So usually when you are, let's say, discussing the credit meetings or evaluating the credit for the future, you are going to establish how much business we can get from them. So not based on the past performance of the agent but based on the future expectation of the business. So that's how you need to classify them, not based on the your own preferences, and not and it the classification also is in the terms of the higher credit. So for example, let's say there are over 90 days amount outstanding. So you may want to do a ABC analysis of those over 90 days as well to see who are those the top defaulters who needs to be managed well and who are the smaller ones, not everyone, so that you can chase them on a regular basis. No, everyone need to be chased. It's not that you're gonna lose the money over the small from the small defaulters, but you may want to invest your time and energy on the one which are giving you the most headaches, the most amount of over 90 days, over 180 days. So those are the agents which needs special attention. And then you are going to review the credit limits every 6 months. So that you can reduce who have not used the credit or who are on default, right? And communication is the important matter. Say every whenever you are revising the credit limits, there has to be a communication with the customer that why their credit limit is increased or decreased or even removed out for certain business, so that in case there is a possibility that you may even get the business from them if you are not getting, because they may want to continue getting a credit. And in order to get in order to just keep the account active, they may give you some business. And then usually there is a special arrangement for groups and ad hoc business. So as we have discussed already that we don't include the special groups or ad hoc business into the permanent credit. So we create ad hoc credit accounts for them so that they which are time bound and the amount based. So they can be up to, let's say, $100,000 for 30 days. So that's their credit limit, temporary credit limit, not the permanent credit limit. So once the amount is over and the time is finished, then they go back to their normal credit. And usually, aging summaries, you split out the normal credit and the permanent credit and the temporary credit, so that we can so that the temporary credit is not affecting the decisions of the management and analysis of the AR aging. So for the purpose of ABC analysis, for the purpose of looking at the total, taking the top 20 or top 10, you normally exclude the temporary credits. And whenever we are following, usually there are, I have seen the credit managers usually follow by phone or by the other methods, but not by the written follow-up. So written follow-ups are important for making sure that in when you have to sue the company or when you need to have a legal documentation, the written notices are there. So whenever we are sending the notice, before that you need to have a verbal communication with the customer, not just send only the written notice, because that's not a effective way. So normally you have to call them in advance and then send the emails or even registered letters. So if let's say emails are not working, they are not replying, then you have to send send them on to the register letter. So you need to have a clear process how many follow-ups the credit manager is expected to do before you are sending the register letter or the legal notice on ad hoc basis by the credit manager. And you need to pay special focus on the slow payers, means who are usually paying after the due dates. Irregular business means they are giving 1 month and then after that they quiet, and then another month they are giving business and then after that they become quiet. So you have to look at the what are the reasons why they are irregular business, and you this is something usually we need to talk about in the credit meeting. So even though there are usually sales meetings or other type of meetings, but certain agents are not really focused upon. So if they are discussing the credit meeting, they may they may get attention. And also disputing on rates, if they are usually disputing on the charges, that also you need to pay special attention and discuss with the sales and marketing department to make sure that getting attention and we are fixing the rate disputes. Because if they are usually rate disputes, promotion disputes, reservation disputes, there is a lot of wastage of time, right? So you want to fix the problem rather than try to tackle every dispute, because that makes it delay. Some agents or corporates usually have a tactic to dispute things just to avoid or just to delay the payments from their end. That's usually the best practice. So that was the credit department. So now we are going to discuss a bit on the cash transaction. So this is a very simple. I just try to make it keep it simple because cash transactions has nothing much, not much of the things to do, but it may help you to understand the process of how we handle the cash in the hotels. So the general setup of cashiering in hotels is that there is a general cashier who is managing the overall cash balances in the hotel, right? So he is they are responsible for the bank statements, for the actual cash in the safe, and also manage collecting the floats from the operational supplier, operational cashier. So there are under them, or not really, maybe under their administration, but below them they have there are front office cashiers, there are outlet and venue cashiers, like the spa, laundry, if there's a laundry shop, gourmet shops, or F&B outlets. So they may have their own cashiers, and then there are usually office floats. So and instead of getting every single petty cash paid from the general cashier, which will make it very inconvenient. Normally, there are floats which are given to the front office, which are given to the front office manager or duty manager or finance office or purchasing or sales and marketing for doing the petty cash things, right? So that's how we normally set up the cashiering. So the general cashier keeps the overall cash of the hotel, and then the front office cashiers usually are responsible for only their operational money. So they are responsible for taking money from the guests, they are responsible for paying out to the customer and do the currency exchange. But at the end of the day, they have to report everything back to the general cashier. So all the collections has to be given to general cashier in a form of a report. And also if they have used their float, because they are also given a float, right? Of front office cashier is also given a float, and outlet cashiers are also given a float. To primarily the purpose of the float is to do the short exchange, if there is a small exchange. And also for front office, they have to do the paid out or the currency exchange, so they have to give the cash to the customer. But ultimately everything come back to the general cashier for overall control and depositing to the bank. So usually the cashiers are issued a float that to manage the daily transactions. So this is how the flow of the money works. So there is a money, the overall hotel cash, which is keep in the general cashier safe, with under the fireproof, under the CCTV, under the under the thief prevention or the dacoity prevention measures in under the steel box. So that all the cash of the hotel is keep in those safe, right? After that, because every time you cannot go into that safe and bring the money, so the operational cashiers are also given a issue float in a specific name for given they are given a very specific safe also, or a drop box, so that they can keep their money when they are not on duty. So they are not allowed to use the cash outside the hotel. They are not allowed to bring the cash outside the hotel. They are not allowed to keep the cash in their changing safe also. So there is a normally a changing male and female changing areas where they go and change the uniform. They are not supposed to keep the money over there as well. So they are normally given another safe which is near the general cashier's office in most of the time, and then they use that place to keep their cash safe, and they are given a key, and master key is again with the general cashier or and a security. So they all have the key which is they can use as a combination to open the safe in case the cashier is not coming to the duty. And then any collection which is done at the front office at the outlet is has to be turned in on a daily basis. So whether it's a Sunday or a Saturday, usually there is a process of envelope, right? So there are either the paper envelope or the cloth envelope where the cashiers, whatever amount they collect, the extra amount from their float, they have to deposit back to the general cashier. So they don't have to drop everything. They have to drop only the amount that they have collected from the guest on a daily basis, and they have to just make. They don't need to make a summary, but they have to go and write down in the Dropbox template where they have to say how much money is it, how many envelopes they are dropping, so that and then there has to be a witness usually so that they can drop it. So every collection has to be dropped on the same day. The general cashier may not work on a daily basis, but the cashiering drop has to be done on the same day, on a every day, every shift basis. So whenever usually there are, if it's a big hotel, the floats are separate for each cashier. Then usually they have to turn in their deposits on a daily basis, on every shift basis. So if there are three cashiers, there will be three envelopes for every shift. And then if any payments are there from the floats, means you have paid anything to customer as a paid out, or as you have converted any currency, or you have given the money as an advance to hotel employee for doing certain emergency purchase, those amounts are treated as due back. So you still have to submit the report back to the cashier, and you will be able to get the due back claim. And usually there is a daily counting of the physical cash and reconciliation with the floats by the income audit. So that on every day, together with the income audit and security, the general cashier opens the safe, they count the envelopes, they count the physical cash, not in the general safe but in the envelopes, and they reconcile with the reports coming out from the property management system or from the POS. And reconciliation is normally done by the income audit to make sure that all the money that is supposed to be received by the outlet cashiers or the front office cashiers, or whatever due back they have to take from the system, is reported in their cashier drop report, right? And usually there are surprise cash counts by the income auditors. So income auditors are required to do a monthly cash count which is on a specific date, but there are also surprise cash counts. Every now and then they have to do the surprise cash counts on individual floors. And once in a year, they also have to, or once in a 6 months, or once in a quarter, depending on the hotel policy, they have to do also a simultaneous cash audit. Means that all the hotel cash has to be counted at the same time. Means all your front office, F&B, general cashier, everybody has to be counted at the same time, because normally what happens is there is a risk that you may go and count the front office cashier by the time F&B knows about the audit, and then they can start to match up their cash. So is to avoid this kind of situation, normally they have to count every single approach into at the same time. So it means they need manpower for that. If there are, let's say, two, three outlets and five cashiers, So there you need time for, and you need manpower to do that. So they normally take and help from the finance department to do this type of auditing. Then, no, as a normal policy, as a practice in the hotel hospitality industry, the personal money is not allowed on the floor. So, normally, like for example, the most of the uniforms, they don't have pockets. Even if they have a pocket, they are not allowed to keep their personal money in the pockets. If there is anything, uh, it's normally treated as hotel cash. So I have found many times when I go with the income auditors, if there is cash, normally the employees claim it as their personal cash, but we normally say, okay, there is no personal cash on the floor, so means that money belongs to the hotel. So that's very simple. And there are tip boxes. So they are normally tip boxes are designated at the hotel's counters, like front office, front F&B, and the tips are not supposed to be mixed with the hotel float. Otherwise, there is always a confusion at the time of checking, because not all the tips are given by from the system, right? So they are not recorded in the system. So usually is given cash by the, if they mix it together with the float, they can always claim the excess money is tip, but it may not be the case, right? So the tip boxes are designated, and any money outside the tip box is not considered as a tip. So that's an important factor in the hotel cash. So the operational cashiers usually have two type of receipts. Two type of things. One is receipt. So normally the guest deposit at the time of check-in or during the stay, and settlement of the folios at the checkout. So that's usually the receipt of the operational cashier. Or for the at the front at the F&B, the settlement by the guest and in cash if they are supposed to pay in cash. So there are many guests staying in the hotel who are supposed to pay cash only, right? So they are normally so they even at the F&B or a outlet or a spa, they will have to pay cash. So these are the receipts, normal receipts from the operational cashiers. So usual control from the receipts is that the money collected is turned into the hotel general cashier in envelopes on a daily basis, and the usually is witnessed by another independent staff. So usually there has to be somebody else apart from the cashier, because they are normally a non-operation, they can be in the non-operational hours. So when the cashier is not there, to and they can drop a empty envelope also, and they can claim that they have dropped the money. To avoid it, normally the policies of the hotels are required that they have to have a witness at the time of uh, dropping the envelope into the general safe, and there is usually a CCTV also at the same time, to just to make sure that there is a capture of the drop sequence. All the envelopes are usually open and counted in the witness of either a security or income auditor. So normally the income auditor and general cashier, because they belong to both to the finance department, there is usually a requirement of an external independent witness, just to avoid any blame later on that we opened the envelope but there was money and it was not reported. So to avoid that kind of situation, normally there has to be another third party witness when, especially when you are opening the envelope and counting the money uh, in found in the envelopes. So that's an important aspect. An employee is normally dropped daily, even though the cashiering is off. Um, Risk in the receipts usually is the fake currency. So there usually are instances where you get local currencies are fake, the foreign currencies are fake. So usually you have to have the currency counters or the checkers at the operational at least one in the hotel at the front desk. Um, if F&B has a uh, lot of transactions, then you may want to consider one at the front F&B as well. Then there are usually over and short collections. So sometimes there are over collections, sometimes there are short collections. So that is usually happened at the on a daily basis. So the income auditors are usually checking every day how much. So there is a tolerance limit in the hotel, depending on the hotel policy, that how much money can be accepted as the short or over without any action or without any punishment. So usually it's about $1 or something, so that the if they even if there is a over and short, the cashiers are not reprimanded. But if it's go beyond a certain level, then normally there is just a so there are multiple steps. One up to one level, there is no action. After one, there is usually a verbal warning, and the amount has to be collected back from the cashier. Or if beyond certain amount, they have to get a written warning or a suspension. Suspension usually happen if there are multiple times you are getting the receipts in, like say, in a month or in a quarter. So that depends on the policy of the hotel. So the hotel policy on cashiering need to cover that aspect. And then there can be unreported collections, means the employee can maybe do the voids, do the rebates, and does not report the collections. So that usually is not is recovered only through the analysis of the void reports or the rebate reports from by the income audit, if they are valid or they are genuine or not. The another method is to do a surprise cash count on the cashiers who are usually having a overage or a shortage, right? So you may also want to check on those cashiers on a regular basis, so that we can make sure there is no unreported collections. So that's the process of the receipts and the internal controls that require on the operational cashier. Then usually there are payments mostly at the front office, because the F&B cashier or spa cashiers are not normally making any kind of payments, right? They are just only collectors. They are not making payments on refund. They are not paying any advances. They are not paying any paid outs, or they are not doing any currency exchange. So the payment controls usually are required. The process is usually you have to claim as a due back from the general cashier. So the process is, when you pay the money, you have to submit a due back form and request the money from the cashier. The cashier will check with the income audit and with the system if the money has been actually paid. And then once they claim it from the finance of, then they will actually top up the due back immediately, so that the cashier has their proper float, which is complete, right? And the most important thing they have to check is the validation of and authorization of the payment. So all the refunds and paid outs has to be checked properly, which we will see on the next slide. What are the important things? Paid out can cause the losses to the hotel, because in one way you are not making any income on the paid outs usually, because the hotels are not sometimes hotel charge a transaction charge on the paid outs. Let's say if you draw $1,000, the hotel may charge 3% as a service charge for paid out, or 5% as a service charge on the paid out. But the very big hotels or the super luxury hotels, they normally don't charge anything on the paid out up to a certain value. And the membership of the certain loyalty program also requires that the guest can get a paid out free of cost. In that case, usually the hotel is losing the money, because one is when the guest paid out is done, is normally done in cash. But the payment, which when you are collecting from the customer, is usually in the credit card. So one is you are losing on the credit. Another is that you may get loss on the float, because the if the guest is staying for 5 days, 7 days, your working capital investment is increased, because you have to pay cash now and collect at the later stage. So that's the problem. And usually the paid outs also sometimes can be of fraud instance. The risk again here is not that much, is only on the fake currency, especially on the currency exchange. So that's the risk on the payment side. And usually you have a currency exchange. So if the hotel is a authorized money changer, usually can describe the currency exchange on the front office. because the hotel rates are higher than the market rates, there are limits on how much money you can actually transfer, how much money you can exchange, because it can be a possibility that you are, collecting the, giving the money, out from getting the dollars at the higher value, going into the market, sell them and collect a higher cash, and drop the difference in the front office. So that is found in some cases. So that's usually the hotels are limiting on up to what amount the currency exchange can be done. Also because the floats are limited in value, so they don't want to give all the money to one person only. So unless there is a authorization, so you normally have authorization limit up to a certain value. Currency exchange is normally done by the front desk. After a certain value, it has to be authorized by duty manager or front office managers. So that's the normal process of the operational cashier. Any questions or any thing so far, or anything which is not out of the place?
So at times, cashier receives damage or torn notes currency also.
Yes, yes. So that, yeah, correct. You're right. So normally the cashiers receive that money. So there is always a tolerance limit. Normally, the general cashiers are required to train the operational cashier on how to identify the currency, whether it's right currency to exchange, or we can accept the damaged currency or not. Um, Even in sometimes you have to accept, because even if it's damaged, let's say local currency, it's still a legal tender, even though it may be torn from one place or another place, but it is still a legal tender, because the if the seal is there, if let's say the other requirement of the number and the strip is there, you normally can have to accept them. So the banks, the general cashier has link with the bank, where they can go into the reserve banks and exchange the torn notes from received from the customers. So usually you have to have a clear guidance on the to the operational cashiers what money they can accept. So I give you an example in Myanmar at the moment. Um, Even the US dollar notes, if they are just dirty from one corner, or if they have a pencil mark, normally banks don't accept. So we at the hotel, if we accept, then we cannot deposit into the bank. You have to go outside in the market and sell them at the local market, and then you will get the money. So there is usually a risk that the outside, because there is it's not a regulated market, you don't get the rate, and the rate keep on changing every, like, 15 minutes or 20 minutes. There is always a difference of a few chats, right? 10 chat or 20 chat per dollar. So if it's 2000, if it's $100, you are losing money on that. So that's usually a risk with accepting the currency. That's right.
Also, in the open market, if you go and sell, so there is no receipt as such. They just give a cash.
No, I mean receipt. There are money authorized money changers usually give a receipt. They may not. They may give you a very small, like a bar printer receipt with the stamp on them, but it's not an official receipt basically. But there is some document which is given to them, and that's why it's very difficult to. And normally, when you go to a when you go to a, let's say, normal people go to a currency exchange, you take the money and then you get the receipt. Normally, you throw the receipt, right? You don't really keep the receipt. You just keep the money only. So, if you want to do something, you can go and collect that from the road, or wherever you can get those receipts easily, and the exchange persons has no problem in giving you the fake receipts also. So yes, open market is a big risk. That's why the currency exchange in the hotels is one of the lucrative business for, if you are accepting the foreign currency in settlements, right? So because the hotel rates are quite low, normally they are 3 to 5% lower than the market. So it's very easy to collect, go into the market, sell it, and then take the money and keep the difference, right? 5% difference is it's not a small money. So that's the so it's a general cashier summary template, just a simple template that we follow in our hotel. So that's normally that's how you create a general cashier report. So the general cashier on a daily basis has to submit a report back to the income audit, and they what they do is they basically look at every person, how much is the amount remitted in the envelope, how much was the cash sale from the system, what is the due back. If they have paid something, then it will come as a due back, and if there is any shortage or excess from the amount that they have remitted from the system. So it this has to be prepared by the outlet for each cashier separately, and also the duty manager if the duty manager has received anything. So at the end of the day, that includes also the part of the banks or the other areas, if the AR has received, so that report also will go here. So all the cashiers in the hotel, whether they are outlet cashiers or the finance cashiers, they all have to submit their report in this specific format. So by looking at this report, it's easy to see how much actual cash has been collected in the hotel by every department. Okay, so usually there is a few internal controls that are placed on the floats that are given. So usually is issued only to a permanent staff under their personal name. So floats are like a personal money you are giving in advance. So they are not given to a department. They may be given to a department when they are like front, like we know, used to implement that the float is given to the F&B team, but they are given again in the name of a specific person, is in the name of manager or somebody who is responsible for that money. You cannot give the float to a department which is has no name and no responsibility. So it's issued to a permanent staff under a personal name all the time. That normally has to be acknowledged and evidenced by somebody. There has to be a dedicated locker to keep the money while they are off duty, so they cannot bring the money to outside. Then the amount is normally determined based on the average payments, and then uh, how much money you have they have to pay from that particular float. So if let's say for F&B float, they are not making any payment, they are just using it for the exchange of the money for smaller money and doing the short exchange. They don't get the lot of float, right? So they get only a small notes so that they can do the exchange whenever there is a payment from the customer. So it depends on the average size, average check size. Maybe you can take 5 or 6 customers on a day depending on how frequent is the business. So that comes from the experience. Then the front office, you have to estimate how many people will come for currency exchange, how many people will ask for paid outs, how many people will ask for petty cash advance or the any other guest needs that may occur. So usually the amount is not given to every single cashier is given to the duty manager or to the front office manager. The smaller cashiers, they get normally money only for some paid out and also the usual small currency exchange, not for the bigger currency exchange. So that money is keep in the duty manager's floor so that they can give out money to the other cashiers. So whenever they are giving money to the other cashier, there is normally a transfer document signed by each of them so that they can borrow money. So the income audit knows if the money has been transferred from one person to another person, and the other person can claim it under the due back. And then usually there are surprise checks to ensure that the utilization is proper, and it needs to be refunded or transferred on the employee termination, or if they go for like a long leave, let's say they go for a week off, so it has to be refunded. So normally the hotel policies dictate how long the person has to be off duty to command that it is refunded or transferred to another person name. But on employee termination, for sure it has to be refunded and transferred to somebody else. And usually there is a infidelity insurance taken on each and every cashier in the hotel. So usually we take insurance on the cash itself, the cash storage, how much cash we keep in the hotel. So that's include the float of the hotel in the general cashier plus the operational cashiers. And also, we take insurance on the infidelity of the cashier himself, not only on the cash, but also on the infidelity. So, that amount is determined based on the general cashier plus the other peoples who are handling the cash. So, infidelity insurance is not only for those who manage the cash directly, but also include the people who have any authorization on the cash usage as well. For example, duty manager, front office manager, general manager, financial controller, they all have authorization on the cash usage, right? So infidelity insurance is taken for every one of them, even though they may not handle the cash directly. So that's the internal controls on floats and general cash. Even it applies to the hotel float and also the individual operational floats. Okay. Then there are cash paid outs by the hotel. So usually you can pay the cash paid on behalf of third parties, or you can make a payment to the guest himself, right, on behalf of the to the guest, on behalf of guest against the credit card, or on the folio credit, or for tips, or for babysitting services, or for anything else. So there's usually a defined task list, like reason why the hotel guest can get paid out, right? From, especially from the credit card. So usually the paid out are easy to get for in-house services, for example, babysitting, or you want to rent or anything, or you want to host a party, or you want to take anything else where you are using the guest, using the hotel services. So it's easy to get those the cash or paid out. But if it's a third party using, so for example, if the guest is borrowing a projector from a third party and the hotel does not have any control on it and they are not earning anything, so they may or may not paid out on that. So it depends on the hotel policy, how much flexible the hotel is, because there is a cost, right? So there is a credit charge which you credit card charges which you are paying from the hotel. So normally from the paid out, the hotel may charge that amount to the guest as well. So if you are paying 2,000, you can charge 5% or 10%, depending on the negotiation or depending on the hotel policy. But sometimes, as I was saying, for long stay guests, you may not be able to charge a lot of money from the customers. And there is a float loss, right? And then in case risk in case of a skipper guest. So if let's say the person has been staying for a night and he has taken money from the hotel cash and he run away. So you lose not only the room night charge, but also the money, physical money from the hotel. So there is, so the who is going to get a paid out is also defined in the in the policy of paid out. So there has to be a very clear policy who can authorize a paid out, how many nights the guest supposed to stay, and what should be the maximum amount of paid out. And usually the higher the longer the higher the loyalty of the guest means, if they are member of anything or they have been staying for many times in the hotel, then they normally get a higher paid out. The first timers or one nighters, they may not get any kind of paid out even with the charge. So that's the cash paid out control in the hotels, and it is also can be misused by the staff. So they can take the paid out on behalf of the customer and use it for a couple of days, and then after that they can return it. So that usually happens. Then there are cash refunds. So cash refund usually need to match with the payment mode. So if the money has been, let's say deposit was paid in cash, so usually you can pay a cash refund. But if the deposit was done by the credit card, you normally do not want to refund in cash. So you have to match the payment mode. How you are going to refund the money? You are going to refund by cash or by credit card? Ideally, we match the payment mode in the beginning or at the time of deposit payment. Normally, we don't want to give the a cash refund when the payment was made by the credit card. Especially that's the problem because normally you have to pay the credit card charges on the credits. Then the authentication of the guest signature has to be there to ensure there is no fake fraud, no fake refund. So so the front office has to check the guest signatures, and they have to collect the advance, the original receipt of deposit from the customer. So normally that's why there is a normally a signature taken at the deposit receipt, so that we can check when you are taking the deposit receipt back and returning the money to the customer. Normally you can check the signature on the refund folio. So if you don't take that, then you have no way of matching. Anybody who found the deposit receipt can claim the cash refund as well. So that's a very important step in the having the guest signatures. Sometimes the cashier or the operational cashiers, they don't take it very seriously because they don't understand the risk involved in this. And usually the income audit check all the refund cases with the rebates and adjustment in that particular folio or on that day folio. So there usually are checks if there is any adjustment in that folio for before the cash refund. So that's taken very seriously if there is anything to make sure that the refund is not done unauthorized, right? So that's the main things of the cash refund. So the last thing that we have is the petty cash reimbursement. So because the some other departments like the purchasing or marketing or other administration offices usually have petty cash, so that they don't have to go to general cashier all the time for asking for small payments. They There are certain requirements like checking of floats, so regular checking of floats, so that there is no expense which is done by like a month ago or 2 months ago and still has not been claimed from the hotel. Because usually if let's say you are giving a float to somebody, they can use it for their personal use, and they can just put the money, they can put any invoice into the billing, so that when the income audit is checking, they see, oh, there is an invoice which is paid, so the money is not there. So that is a one reconciliation. But then the question normally is that how old it is, right? So that you can make sure that the invoice that is placed there to against the use of the cash is genuine and is for the hotel purpose. That's an important aspect in the petty cash. Then the another is the regular claim of reimbursement. So normally there is a policy that every 6 months, every 7 days, or every 2 weeks, or every month, the holder of the petty cash has to claim the reimbursement of all the invoices. This is again just to make sure that the money is not utilized for personal purposes. Then also there are sometimes IOU, means you are giving money to in advance to the staff for making the expenses. So you have to also monitor if there is any IOU which has been pending for long, and who has been given that IOU. Is it still working in the company, in the hotel or not? So those are important aspects of managing the cash in the petty cash. And then the documentary control of the receipts and the approval metrics. So all the expenses has to be approved or pre-approved by their department heads or division heads, so that the money is used properly.